All right, morning everyone. Let's kick it off. All right. Last night's session on the in the U.S. we really made up everything that we gave away the day before, almost exactly. In fact, markets up very similar numbers to what they were down the night before. You can see there every sector really in the green for the session. And I think really just kind of led up by the dovish tone to the Fed minutes, or that was partly that. I mean, that was only released after the market already, got its giddy up going for the day. But there was outside of that, I mean, there was no real reason for the market, for the leadership in the market on the day, and it just, it was quite surprising to see the markets just kind of come out the box, out the gates, trading so well. So we did have energy stocks that traded pretty well, with boosts in crude oil price after crude oil inventories came in lower than expected. But I mean, there's no other, there's really no catalyst for it, ahead of the Fed minutes. In the Asian session, we really got a really solid day there across the board, with all the indexes rising. You can see that the Nikkei had a very power day, and probably rightly so. Yesterday, we talked about it first thing in the morning. Very concerning. The yen was dropping 101, and if it got below the 100 level, then we thought really could create some havoc. And I think the market really thought that there were going to be a lot of stops triggered below 101. Didn't really happen. It was a very mild sell-off, a very mild rally in the yen yesterday morning, and reversed it kind of throughout the U.S. session as we started to build some strength, and then you see the Nikkei really following on the back of that yen weakness. Also in Asia, we had HSBC flash PMI numbers out of China that were better than expected. Still in contraction mode, so still under the key 50 level, but much better than expectations. Were for 48.3, I believe, and came in at 49.7. So best reading in 5 months, and obviously got things kind of kicking there again. In China, we saw banks and tech stocks really kind of leading the way on the back of all that. All right. Just a little chart here, not really pertaining to us here locally, but this is quite interesting because this is showing the U.S. home builders relative to U.S. interest rates, and typically, historically, obviously, there's always been a really nice correlation in terms of lower rates, gets the home builders rallying, and that just has totally broken down as of late, and it just kind of continues to show, so over the past few months, which here you can see 2 months of inverse correlation, really, that the whole breakdown in terms of the market's correlations that we've been talking about now for the past month, is proving itself really in most all spheres. So this is another good example of how that correlations but in global markets have really just kind of just totally eroded. All right, this morning we had HSBC, we had SAB Miller with full year 2014 numbers. We had headline earnings per share at $2.42. That came in a little bit better than expectations at $2.39 per share. Revenue was a touch light, though, down by about $500 million. And then the divvy also missed by about 2 US cents. So all in all, maybe a bit of a mixed bag out of SAB. This one's really, this one typically on earnings and on their trading statements are the days where these things really move. And I don't know why, but it typically seems to move around 20 Rand every day, with one way or another, regardless of if it's a beat or if it's a miss. So just keep that in mind today. If the market takes that as a little bit soft, we may see a little bit of a 20 Rand down move. All right, Investec had headline earnings per share 34 pence. Expectations for 36. It's a little bit light there. Divvy was 1 cent better at 11 versus 10 expected. I think the market will really like the NAV number though. That's quite a nice bump up in NAV per share, up 23% to 60, basically 66 rand. So I think the market will probably like that one. And then later in the States tonight, we've got Hewlett Packard. Tons of data out today. Like we said, we had the Chinese PMI numbers this morning. We also had some better PMI numbers out of Japan. We've got French PMI, German PMI. We've got Eurozone PMI. So a lot happening there. In the UK, we've got GDP, which comes at 10:30. The data out of the UK has just really been coming in better on all spheres lately. We've got Chicago FedNet and Activity Index later in the States, as well as initial jobless claims, which will obviously be the main focus there. We've got Bloomberg Consumer Comfort, we've got U.S. PMI numbers, and we've got existing home sales. And then the biggest thing I think for us today, all in all, is obviously probably going to be the rate decision. I think that there's a lot of people in the market right now, and it may even be majority that they're going to hike today. Hasn't really had a big impact on our interest rate sensitive stocks, especially some of the banks and the like. So we'll have to watch it today and see how it plays out. Last time when we got the interest rate hike, the banks got absolutely annihilated, as well as some of the retailers. But I think that it would definitely be more priced in today's announcement. All right, let's get into some maps. All right, first thing we're going to look at here is Mr. Price. We did the last couple days. We have gotten a little bit of a sell-off in some of these retail names. I just wanted to show here is really the breakout that we had to new highs. Really kind of failed as of yesterday, and we dropped below that support line. There's definitely a bit of a trend support coming in here closer to 160. But we definitely failed that for the time being. So 166 has now dropped. That's going to definitely be a bit of a barometer for us. If we can get below this little ascending trend line there, then I think it would definitely be quite bearish for Mr. Price. So we'll watch this one closely to see if it moves to either side of that of those two lines there. ShopRite. Sorry, let me just shorten this up to 30-minute chart on ShopRite here. Oh, sorry, that's giving me the wrong thing. I'm looking at, this is SHP London. Here we go. Okay, I'll just do it like this. Okay, yeah, ShopRite here making a bit of a head and shoulder pattern down to about the 165 level, if I'm not mistaken. I think I'm off by a touch there. Yeah, call it 166. So we're really kind of closing right on that support line on the head and shoulder pattern that we've set up here over the last month and a half. I think if we can drop that, I'd like to see it drop 65 and a half, for instance, on a closing basis for real confirmation. But if we drop out of this little head and shoulder, we could definitely see some further downside here over the next few sessions. So some of the retailers have started to turn over a little bit in the last few sessions. Trueworths, ShopRite, Mr. Price starting to pull back. So even some of the stronger names definitely starting to show a little weakness and maybe just a little bit of profit taking going into what could be an interest rate hike today. All right, next one we'll look at is Able. After really breaking down, I think that their earnings came out the other day and not quite as such a disaster as the market thought it might be. If we just have a look here, you can see we know very clearly that the level is around 235, 240, somewhere there. And we're really right now, we're kind of, it looks at the moment like we're bear flagging up into this level. So I think that this is going to be really important. If we, I would expect us to fully to test this level today. I mean, seeing as how we're 15, 20 cents below it, and the futures are going to open up, are opening up a 0.5%. I would fully expect us to come up here and test this level. This is going to be a big test today. If we end up failing this, then I think it'll really be confirmation to sell these things, probably to go to new lows. So watch Able closely. Tiger Brands. Let me back out into a 2-year. We showed this chart not too long ago, and you can really just see here, down to about 295, there was real trend resistance on the longer term chart, and that broke. That was broken out from yesterday, and really, I mean, the potential of a higher target here. That's not the potential of a higher target. The number on the higher target is quite dramatic. So just keep that in mind. We've definitely broken out. I mean, I think it needs to get above 300 if it really wants to have any more legs. It's probably a little bit overdone in the short term, so we may need to see it consolidate around this what was resistance, now support, and we'll see how this plays out. But definitely a big target, on the cards and Tiger Brands now that's above that level. All right, Barlows. Barlows definitely traded very poorly yesterday after the Caterpillar 3-month rolling numbers from Caterpillar that were released on Wednesday afternoon, and you can see that we dropped crucial support here, which is at about 109. Is it 109? I was thinking it was higher than that or lower than that. Yeah, okay. Call it 109. In Barlows, we dropped that, and definitely setting up for a further sell-off here. I mean, yesterday it really sold off probably about 3.5% or so, but I think that there's definitely more meat on this bone. We could end up seeing a bit of a second-day play today in the share, and really the target on this is probably going to be about $8 to the downside, which would put us perfectly down here to support close to $100 and right about the 200-day moving average. If it gets down there, actually might not be a bad little place to nibble, because I think it also looks like it lines up here with some trend support. So probably going to see it correct down to somewhere along the trend supports, and maybe that's the lateral support level around $100 on Barlows over the next few weeks. And that's it for today, guys. Thanks a lot.